Hello and welcome to Innovation with Leadership series by ETBFSI. In this series, we bring the top voices of the lending industry to talk about the innovation and how new tools are helping in their growth. Well, in today's episode, we have with us Mr. Sunil Pandita, who is VP and Business Head at Newgen Software, and he will discuss with us that what role the technology and innovation is playing in the growth of the industry as well as the company by fostering leadership skills. Hello sir, and welcome to Innovation with Leadership series by ETBFSI. So let's begin the conversation with a big picture view. So according to you, what role artificial intelligence is playing in the financial landscape and what future it can hold and the roadmap that it is providing in the journey of Viksit Bharat?
Thanks for having me. Great question to start off with. So financial inclusion is going to be a key ingredient for Viksit Bharat by 2047. If you look back, when did financial inclusion really get impetus? This was when the first set of the Jan Dhan accounts start opening, and then the JAM Trinity accelerated it. So today we have roughly about 56 crore Jan Dhan accounts. So that's one part. Now, is that inclusion in entirety? It's not. If you look at the other aspects of inclusion, now that you have a lot of people, a lot of population who is banked, you want to take them to the higher level of financial services product portfolio. You want to give them credit, not just individuals but even businesses. You want to make investment products available to them, and of course then ensuring their property, their life. So you look at the entire gamut across various assets, liabilities, products, then wealth, investments and insurance. One key issue we have had in extended credit to larger, especially in a country where there is a lot of people who are first time credit users, is the credit scoring methodologies we have used. So traditionally we have used methodology where you take data which is already available, but for a country like India where that data is not available, alternate methods become very important. So that's where AI becomes handy. So imagine a person in a tier 2 or tier 3 city who doesn't have a credit history, but he is a mobile user, he has utility bills, right, and he's there on social. So you look at intent to purchase, you look at those aspects of his persona, and you're able to make credit decisions which are more intelligent. So AI will play a big part. It is playing a big part in relooking at the traditional credit scoring models and making credit available. That's one part. Second, as I said, availability of products so that you can have a higher product density. It's not just one product, one loan, but you want to have more products per person, and you want to give people choice depending on the demography, depending on their lifestyle, on their life stage for different products. So ability to not only assess credit but also be able to make that journey very impactful and very easy for people, some of whom may not be so digitally literate and do so digitally savvy. So that's another aspect where your ability to configure journeys specific to different user segments, give them products proactively in a very non-intrusive way, which are applicable or which are relevant to them at that particular stage in their life, that goes a long way in ensuring not just having a banking account, not just having a loan account, but also leveraging other financial services products and services and products across the entire gamut of what is available in the industry today.
Well, thank you for these insights, and I believe that it is a space that has to be watched very closely, and a lot of new developments are expected in this space. Now, coming to BFSI sector specific questions, I would like to understand from you that what are the trends that you are observing in terms of customer expectations, and how do you catering to them, and what are the outputs that you are observing in this space?
So let me segregate those. Let me first look at the demand side, which is the consumer, the customers, the banks, financial services that we serve, and their consumers who are both individual users as well as business consumers. So 2-3 different very distinct trends we have seen in the last few years. The first is their need for products and services which are appropriate to them, which are curated for them, and we see them as an individual segment. We don't segment them as part of a larger demography. We call it in Newgen parlance, we call it when you're doing segmentation, we call it hyper personalization, n equal to 1. So seeing them as that particular persona and suggesting products accordingly. Second, if you look at the millennials on the other side, they want product selection where they have lot more flexibility of choice. Right. So, for example, they want a product configurator where they can make choices and choose what product they want, whatever financial services product it is. So, they don't want to be dictated that this is the best product for you compared to another demography. So, your ability to serve products, provide product choice and choice of services associated with those products is one big push on the demand side we are seeing from customers. The second is obviously customer experience. Now, a lot of population in India is exposed to all the social media, applications, and they compare that user interface with what they expect from banks. And banks have also made a lot of progress in terms of providing interfaces which are very intuitive. But what the users are expecting is that besides interface, besides interaction, the subsequent services that the product or the bank is supposed to offer are offered which are very fine-tuned or which are very relevant to what he wants. For example, if you have opened a form or you have done an application on your mobile device, the subsequent services, which means the sanctioning of the loan, the disbursal, has to be done in a reasonable time and done very effectively. Second, today consumers want choice in terms of the channel that they interact with, right, in terms of the device they interact with. So, your experience has to be seamless and has to be very consistent across all those channels. Third, when it comes to customer service, it's again very important. Customers today want, we are seeing the proliferation of chatbots and AI virtual assistants, but customers want to see them again, one, consistent, but contextualized to that particular service problem. And from a financial services institution point of what it means is that service opportunity could also be an opportunity to cross-sell, upsell. So, that's the third part. The fourth part, which is again important, is consumers today are aware, irrespective of what part of the economic pyramid they come from. And they want safety, they want security, they want fraud prevention. So, whether it's multi-factor authentication, whether it's detecting fraud in real time, they want those. And a lot of consumers today, especially the millennials, are very, very cognizant of their personal data. So, data privacy plays an important part. They want the institution to transparently tell them what is this data going to be used for. So, the consent mechanism that is enforced becomes very, very important. Those are 3-4 trends we are seeing on the demand side. Which
you mentioned about the millennial population, and you also mentioned about the awareness that has been on a higher side in the customer. I believe that it is also higher on the rural population as well, and the masses are very aware and aggressive in terms of the financial ecosystem that is placed in our country. But let's dig down a little deep and try to understand that what are the challenges that the customer approach you with, and would you like to share any case study and give us more brief about the challenges that they approach you?
I mentioned about the demand side. Now, let's look at the supply side, which is what we serve. Recent past, there is lot of impetus on being able to secure the entire banking ecosystem. Cyber security plays an important part there. They want to mitigate risk. Fraud prevention is another big area which the banks are focused on. Then there is a lot of regulatory intervention now, as you would have seen, and for the right reasons. They're trying to balance ease with consumer protection. So, the financial services are very, very concerned about, and rightly so, about being on the right side of all regulations, right? And privacy, as I mentioned. So that's on that part. There is another part which is directly related to their balance sheets, which is credit risk, which is the fundamental purpose of this industry. Now, as I mentioned earlier, your alternate methods of doing credit scoring, all those things, and when you're serving a diverse set of customers, being able to call out that risk earlier through an early warning, and being able to even after doing that, being able to include more people and give a loan than exclude becomes very, very important. And as I said, we play a significant part in making that journey very, very very seamless, results driven and intelligent using our AI models. And we also have now agentic AI, which plays different parts across the journey that the customer is engaged with the banking or an insurance company. So within that context, the ability of those banks to serve the customers in a way which gives them choice, which gives them flexibility, which gives them experience, plays a big part. Some of the banks or some of the financial institutions that we have served in the recent past, there's a large private bank, and then there are small finance banks, and there's a whole bunch of microfinance institutions who are serving different specific sectors. So there's a microfinance institution who's serving the typical SHG GLG model. Then there's another NBFC who is servicing a small business loan where it is a combination of unsecured, but they still do a hypothecation against an asset with which they secured that loan. Then there is another whole bunch of NBFCs which are coming up specifically in the captive finance, whether it's auto captive finance, construction, or equipment and leasing, and their demands are very different. So the entire bouquet of the types of products that the financial institutions are supposed to have today to cater to different is huge. And they have to do all this within the guardrails of regulatory, safety, security, and making sure they give the right experience to the consumer.
Well, sir, you have highlighted a very meaningful points here, meaningful aspects here, and we know that the financial institutions are trying to be on the right side when it comes to the regulatory landscape, and building the guardrails, or and since from my experience also covering the sector since very long, I have seen that the regulator has also come up with new developments frequently, and just to bring the things on track. Now my question to you is that, as being a tech company, how do you do the process of digital onboarding for the financial inclusion, considering the regulatory landscape that is happening in the country?
Sure. So one of the most critical aspects of an interaction between consumer and the financial institution is onboarding, and it's been eased a lot with the regulator again, and with intervention of technology, making it very easy and very flexible. So entire onboarding today is digital with KYC. Right? But given the issues we have had in the past, there are very, very, very distinct and well articulated norms around how and when, what to do about KYC, how to preserve the data. And any KYC process in any financial institution involves a lot of documents, involves data which has to be captured from those documents. So because of what we do, we have an agentic framework based on the Newgen agentic AI platform, which gives you a KYC agent which automates that entire process. So it combines our ability of understanding documents, extracting data from them, then ingesting them in the downstream process, and also being able to redact and any PII identifiable information, and then do the next work step using our workflow engine. So that complete process becomes very seamless, becomes very easy for the bank, but more importantly for the user. He doesn't have to give things again. Simple thing, the classification between if you go across various segments in India, somewhere you will have a passport being used, somewhere you will have a Aadhaar being used, you will have some other document. While a lot of those documents are consistent, but not necessarily, right? So your ability to pick up the right parameter and then authenticate it against, make an API call and do that in a system which talks to talks to the UIDAI and talks to other authorities to be able to give a positive and move the application forward. That becomes very important. But that's the onboarding part. For us, onboarding does, or for the financial onboarding doesn't stop there. Onboarding is a precursor to the next set of activities, whether you're taking an assets product or a liability product, or you're taking an insurance, right? So there, that entire process of downstream credit decisioning, for example, we today have a credit decisioning engine, which is an agentic AI engine, which combines our strong workflow and rules based engine with our data science engine, and also it includes the agentic framework that we have to be able to give you an AI based decision which gives you the right scoring and prices that product. And we are also able to do that, as I said, within the guardrails, but more importantly, as the regulator comes in now, there will be a lot of expectations from the way you're using AI, correct? So is your entire process or the decision making, what's the basis of that? Can you explain that? Is it auditable, right? And what's the data set that you're using? Is that data set consented? Is that data set which is internal, or are you bringing an LLM? So all those things become very important in making sure that you're using AI the right way. So right from the point of having an agent for VKYC to having a credit decisioning engine to having an early warning agent, all these working in tandem within our low code Newgen One platform to be able to make that journey very, very interesting for the customer.
Well, so it sounds like Newgen is really transforming the landscape for the financial institutions, and we are also seeing, like in the last few years, specifically 5 to 6 years, the ecosystem has transformed a lot, and now everything is around technology, and the new technology is always changing rapidly with the time, and we cannot say that okay, this is it. A lot is there that has to be expected from us. Now coming more in terms of the competition that has been created, because when there are developments, a lot of new players are also coming, new ecosystem is also created, which is kind of creating a healthy competition. Now just to understand from you, fintechs are also developing very rapidly, and small tickets, be it small ticket size loans or getting the loan in a click, fintechs are very aggressive in that context, and partnerships are also happening with the REs, be it NBFCs or banks, and the other REs which are registered there. How do you see the growth of fintechs, and do you see a scope of collaboration with them to take the journey ahead, or as a competitors?
Sure. So the way, as you rightly mentioned, financial services ecosystem has evolved in the last few years. I don't think any of the individual institutions are able to survive without each other. So it's a healthy competition between they're co-opting with one another on the on the supply side. Of course, you have the fintechs bringing in innovation, bringing in speed, bringing in a lot of new thinking. Then you have the NBFCs who bring in reach, who bring in alternate credit models, right? And then you have the banks who obviously bring in scale, who bring in trust, right? And who bring in strong balance sheet, capital availability. And then you have all these three are actually collaborating with each other and fulfilling on the vision of financial inclusion, which is having more population in India come into the financial services ecosystem, and at the same time be able to give a higher level of service, so increase penetration in insurance, for example, right? So all those are doing, but where we come in is we play a critical part in being a key technology enabler for all these financial institutions. And the fact that we provide a platform which gives the financial institution the flexibility to use our platform to to build and co-create, or use our platform to just deploy as it is, because we have solutions which are ready to deploy, which compress the timeline. But at the same time, as I said, these agents that we give, they're all API enabled. So, for example, a bank can use, we provide APIs, can use these agents as APIs and work with a fintech and be able to give benefit to a customer. So, we believe we will continue to be a key player as for all the financial institutions. We will continue to work with some of the fintechs for very specific areas. And on the innovation side, we work with RBI, also work with the Innovation Hub. We recently onboarded Reserve Bank of India, where we're doing a very important project around all the regulated entities where the application process, a new product launch, or a new director onboarding has to be done by Reserve Bank of India. So that entire interface, the workflow layer and the process layer is done by Newgen. But more importantly, we're also building an intelligent decision support system, which where we're using an LLM along with our data science model to help them take decisions in a faster and a more predictable manner, so to give the experience to all the regulated entities.
Well, so this thing has really brought in a curiosity in me to know more about Newgen. So just give us a brief that how has been Newgen's journey, and do you have any expansion plan into new sectors, and how do you see and where do you see the company in the coming years down the line?
Sure. So we obviously have completed 32 years, and today what we do, we really help banks, financial services, and governments and other institutions take the next leap of digital transformation, which we think has arrived now. So in the last 5 years, what we did is we provided automation tools which helped these customers automate their journeys using our low-code application platform for content-heavy, for process-heavy, giving process-heavy applications, process complex applications, with a data science-based, machine learning platform. We gave them an ability to leverage that content and use that content in a meaningful way, and also to communicate with customers using our communication platform in a very intuitive way. We've taken it next level now, which means that we are infusing intelligence through our agentic AI. So if you look at our core platforms, we are using agentic AI to transform how easily you can use an LLM along with our platform and be able to configure a workflow, be able to configure a user interface, a data model, to come up with a process and roll it out very, very quickly. We have come up with AI where a lot of content that was there, we can make insight out of that content. Document summarization is a big issue today. So using our Gen AI model, you can do that very, very quickly and extract insights from that. On the communication side, tone, tenor, how you want to communicate with different customer segments, with different users at different instances. That is another tool we use, and again, that is Gen AI powered. So that's what we offer as a tool. But what we've also done, as I said, we have introduced agentic AI in different workflows across industries. In the case of banking, for example, starting from, you map it with the customer journey itself, starting with KYC, customer credit decisioning, then early warning, then collections. All those can be done using our agentic framework. And a customer could use only those pieces. If he's using something else for onboarding, he's using something else for workflow, he could still use only these agentic pieces from Newgen and be able to get intelligence, get adaptability in those journeys. Similarly, on the insurance side, we have AI framework around underwriting, which is big in insurance. Similarly, around deciding or inferring when you're approving a policy, what is the early claim probability which helps you price your product better. So that's the next level, which is intelligence from process, being able to move from agents which work in isolation to an agentic AI framework where it's an autonomous process that is running, which is cognitive, which is adaptable, and all this is happening within the guardrails of our trust framework, which our AI rests on. And our trust really is fourfold. One is the data itself, what's the trust we built in that. Second is the model trust, that's again important. And third is the decision trust. And we give this also in an on-premise model. So for some of the customers who want data to be within their premise, it kind of comes in handy.
Well, sir, before we wrap up this conversation, one last thing that I would like to understand from you, that low code automation is something which is discussed a lot, and it's a kind of buzzword that is created, and Newgen Software is one of the company which is kind of closely associated with it. So in simple language, just for the understandability of our viewers, would you like to tell us that how this works and how it is transforming the core banking processes?
You can answer it different ways, but as you mentioned, can you explain it in a very easy way for? So you leave aside the core banking or the PaaS solution in insurance, and for example, we offer a PaaS solution also in health and in general insurance. But be that as it may, all processes outside of that are very important for customers to streamline their customer experience, to have efficient operations, and also to be able to interface within the ecosystem using integration frameworks. So imagine all this either being developed ground up, custom, or with a point product. Each will have its challenge. Now replace that with a low code framework. So that low code then is a principle, is a way of how you develop products. And for us, that's what it is. It is a principle how easily, without strong IT technical coding requirement, you can configure a workflow, right? You can configure a process. You can configure a communication framework. It is how easily, using a low-code platform, you can make sense and have business users create a data model for AI and put a conversational layer on top of that, so that retail banking head can, in plain English, interact with that model and try to assess where is his next big opportunity. It is again a platform or a philosophy within low code where you are building agents for AI, where we are giving you that flexibility of a visual studio where you can build workflows, build those agents, and it will interface with the data within your organization. You have a data lake, you have data coming from your internal repositories. It will pick up all that data, and basis that you create your own model and build a process around that to come out with an agentic AI. And because we are able to do this low code, there is flexibility. We don't bind you with using an LLM, for example. We work with all LLMs. You can work with any of the available LLMs, or you want to build an SLM, which is context with your business, you can do that as well. So that is what really low code means for us, because it gives you flexibility to start. It gives you flexibility to change. Any change that you want to introduce in a banking scenario, in your credit process or regulatory, you can't wait for months today. Right. You should be able to do this within a jiffy. So that's what low code really means for us.
Well, very interesting and insightful space to watch for. Well, sir, thank you so much for giving your valuable time and interacting with us.
Thank you. My pleasure. Thank you.